So hi everyone, in today's video I would like to explain a bit more on the types of market order. So let's say you are looking at your investment page and you want to make a trade. You want to buy a stock, you want to buy a share, you want to buy a bond, or you want to buy a security. Now, it's really important to understand what types of market order exists, because when we try to place trades, it's useful to understand the different types and why some investors may choose to use, for example, why might you buy it at the current price, or why might you set a limit in which you want to buy the share at. So all this will be explained in this video, and it's crucial to understand the differences, because knowing such differences can allow you to plan your trading strategy, can plan what type of stocks you may find risky. You can make it an immediate sell as soon as the price hits the level in which you want to sell the stock. So it sort of eases investors. You don't need to keep checking. You can place a sell limit. So let's say if the stock reaches this level and you sell the stock, then it's a sort of an instant process preset in your system, so you don't have to go and manually do it. So yes, it may sound a bit confusing now, but I will explain it all in this video. Now, there are three main types of market orders that are really crucial for us to understand. First is the market order. Now, I've mentioned that the market price is the price in which buyers and sellers come agree on a price to buy and sell the stock at. So a market order usually is placed at the current price. So if the current price of the stock is 50 and you place a market order, you will get the stock at a range around $50. So is it guaranteed that you may get the stock directly at $50 sharp, 50, even though you place the orders directly at 50? No, because it may take some time for the stock to come through, because the price usually will fluctuate over small periods of time. So let's say you placed it as of present moment and you only get your stock 2 minutes later, because of the availability of this sort of investor to investor trade. There's a bit of a delay, although it's relatively fast. 2 minutes, maybe about 1 or 2 minutes, it may be still a bit slow, because and leads to your market order being placed at a slightly different price, so maybe $50.02, for example. So the difference is usually negligible, but it's really important to understand that it's not an immediate thing, because it may take some delay through the systems, through the processes, etc. Now, next we move on to the limit order. So now limit order is more of you're betting in terms of you're setting a maximum price to buy or minimum price to sell. So in this sort of sense of limit order, when let's say we intend to buy a stock, so we set the buy limit at, let's say, below the current market price. So if the stock is at $50 now, you want to set a buy limit, let's say at 45. The trade will only execute if the price falls to be 45 or below. So let's say you're hoping that the market price will fall, then you will set a buy limit lower so that you can purchase the stock at a lower price. So it's a automatic thing. You don't gotta open a lot of your systems and go, ooh, let's check the price now. It's dropping. Okay, 45, I'm buying it now. So no, it's a really fast way. You can just open it, place a buy limit order at 45, and automatically, if the market hits 45, you'll buy the stock. Now, similarly, a sell limit is to only sell the stocks that you own at a higher price. For example, if the current is at 50 and you want to ensure profit, so you don't hold the stock for a long time, and you say that, okay, as soon as the stock has 55, I'm selling it. I'll make my profit on this. I'm not going to bet or take any risk further. So that's when you put a sell limit. Let's say you put a sell limit of all your stocks at $55. As soon as the price hits that, you sell and you make the profit. So you're sort of speculating on short-term price changes. You're not hoping for a long-term price, holding the stock for a long-term investment, because you're selling in hopes that you make profit sort of in the shorter run, as you only sell at a higher price. So it's really useful for price control. So we control the price in which we buy and in which we sell, ensuring our profits, etc. However, a downside is that if this price never reaches, for example, if you set a buy limit at 45, but the price of the stock keeps rising, you will never be able to buy the stock. And if you think about it, it should be easier if you just place a market order at 50 if the price keeps rising, correct? So it may be cheaper also if you just do a market order. So a limit order is sort of setting and sort of betting against the future of the market. Now let's look at stop order or stop loss. So a stop order and a stop loss it becomes a market order when the trigger price is reached. So you set a stop order, a stop loss, and then it becomes a market order when the trigger price is reached. Now, what's the difference between a limit order and a stop order? The difference is a stop order helps to prevent losses, to prevent you losing financial, whereas a limit order is sort of to help you make profit and to buy lower. So for example, in a stop order, a buy stop means you only buy at a higher price, meaning you are trying to limit your losses, as in you will only buy the stock if the price of the stock continues to rise. So there are two schools of thought here. A buy limit is you want to buy when the price falls so that you buy cheaper, but a buy stop is when you buy at a higher price, so you only buy when the price of the stock is continuously rising. So it means you have trust in the market. And likewise, a sell stop is you sell your stock if the prices fall. So if you compare it to the sell limit, you sell at a higher price is when you're hoping that there will be profit made. But if you put a sell stop at, let's say, below market price, if let's say 45, if the price falls to 45, your stock will sell, so you limit your loss. So yeah, the feature of this is used to limit losses, and it is carried out, becomes a market order when the price hits the stop level. So hope all of you guys understand some of the basic understanding of the different types of market orders, the differences. Limit order, you're betting against the future of the market. Stop order, you're trying to limit your losses, and market order is just a fast execution, a current price trade. Thank you.